Let me give you a 2-minute explainer on why governments always win and you, taxpayers, always lose. As you know, a large part of the price you pay for a beer is taxes. Alcohol excise and GST covers more than 40% of the price. And the excise is indexed, so as inflation goes up, so does the tax rate. And excises on alcohol have been increased by almost 2% starting today, adding 90 cents or almost $1 to a pint of beer, and meaning the total tax you pay on a carton of beer will be about $25. Grog might expand your midriff, but it also swells the government's coffers. This indexation, locked-in, automatic tax increases happens twice a year for alcohol, but as we all know too well, fuel excise is also indexed, so our petrol tax goes up twice a year too. So governments win from excise indexation to the tune of billions of dollars a year. So, OK, that's tax indexation working against your hip pocket and boosting government revenue. But what about your personal income tax rates? At the moment, when your pay increases above $45,000 a year, you go from paying 19 cents in the dollar to 32.5 cents in the dollar. And then if your pay goes above 120 grand, you pay 37 cents in every dollar. And then above 180 grand, you pay the top rate of 45 cents in the dollar. So as inflation goes up and wages go up and people progress onto higher wages through promotions or taking a second job, the government collects a greater share in tax revenue. We taxpayers are pushed across higher tax thresholds and the government takes a higher proportion of our income in tax. This, as you know, is bracket creep. It hurts you and it helps the government. And those tax thresholds don't go up automatically. They're not indexed. They stay the same under law no matter what happens to inflation. So in this case, the lack of indexation boosts the government's coffers because our wages are pushed above static thresholds. See how they win every way? When indexation helps government, we have it. When indexation helps taxpayers, we don't have it. And by the way, these tax scales will change on July the 1st. Under the current law put in place by the coalition that Labor promised to honour, there would be a new lower 30 cents in the dollar tax rate on every dollar from $45,000 a year to 200 grand a year. This would get rid of bracket creep for just about everybody for many years to come. But Labor's broken promise tax cut plan will put the 37 cents in the dollar tax rate back in, kicking in at $135,000 a year. And the top rate will cut in at a lower income of 190 grand. And on their own numbers, the Albanese Labor government expects bracket creep to net them an additional $28 billion over the next decade. That's $28 billion extra tax from our pockets to Canberra. Treasury officials today had to admit that within about 4 years, Canberra will be taking more money from taxpayers under the Labor plan than they would be under the existing coalition plan. The Treasury Secretary, Deputy Secretary Diane Brown downplayed it. She says only $28 billion out of $300 billion. $28 billion extra, and they downplay it. So how about that? A tax cut plan that actually delivers more money to government. That's economic reform, Labor style. The answer to all this unfairness is obvious. Index the tax thresholds every year. You know, just the same way the government indexes its alcohol and petrol tax takes. Everybody knows this makes sense, but don't hold your breath.